We're working to create more vol, more leverage than BTC. Keep acquiring Bitcoin, generate positive BTC yield, do this as rapidly and responsibly as we can, subject to market dynamics. And they literally change every day. You know that.
Michael J. Saylor joins top strategy executives to unpack Q1 results, bold Bitcoin moves, and future plans. Let's watch and see how they're shaping the next chapter in crypto finance.
Think about the next 10 years. When we sell that $100 million of equity, we capture the $50 million gain up front. Okay, that's great. That is shareholder value created. But in fact, the question is, what happens over the next 10 years? And we use 10 years as a long time frame. Most investors don't really have patience. Long time or forever is about 10 years. So you'll see a lot of analysis here that's about 10-year analytics. What you can see here is if you're a maximalist like me, and like many of our common stock shareholders are maximalist, and you crank in a 30% BTC ARR forecast, that $100 million of capital grows to be $1,379,000,000 in year 10. So now what has happened? Well, we've created $50 million in gain one time, but we've actually created a lot of investment income. And half of that investment income is attributable to the equity dilution. And so the new shareholders are benefiting from it. But the other half of the investment income is captured by the common stock shareholders that existed before the transaction. So that's what we call BTC dollar income. BTC dollar income is the value that's created for the common stock shareholders of MSTR by having sold the $100 million of equity. And if you ask the question, well, how much value is created for the shareholders over the course of the decade? Well, it works out to be the gain plus the dollar income. And so you end up with value of $689 million. So we call it BTC dollar value, 689 million. Now, you can take the ratio of the value created to the capital raised, and that works out to what we call BTC torque. That's sort of a return on capital measure. What is our return on capital? 6.9x. So why is that valuable? Well, if you want to outperform BTC, then you're going to need to find a way to get leverage. So that torque is leverage that allows the MSTR equity to outperform BTC over time. If you want to drive up the price of the value of the stock, or if you want to drive up the MSTR stock, you have to create value. And you can see right here, if we create $689 million of either gains or incremental investment income without dilution, that is the value creation. So we're creating a $6.9 of value for every dollar of capital we raise when we do this kind of transaction. Now, there's another metric you can calculate, which is BTC multiple. And BTC multiple in this case is equal to the total BTC NAV, like 1,379,000,000 over the equity issued. And you can see that the equity was $690 million or so. So in this case, and this makes total common sense, right? We started with an MNAV of 2. We sold $100 million of equity. Half of it was a gain. The investment income and attributable to that gained amount is one half. And the investment income that's attributable to the equity dilution is the other half.
Michael Saylor's strategy continues to dominate the corporate Bitcoin landscape with yet another big purchase. Between April 28 and May 4, the company added 1,895 more Bitcoin to its holdings, spending roughly $180 million. This latest move brings Strategy's total stash to a massive 555,450 BTC, acquired at an average price of $95,167 each. at current market prices near $94,000. That equates to over $52 billion in value, leaving the company with an estimated $14.2 billion in unrealized gains. The purchase was funded through the sale of common and preferred shares, part of Strategy's broader 21/21 plan, which aimed to raise $42 billion for Bitcoin acquisitions. With the MSTR portion of that plan now fully tapped, the company has launched a new 42/42 plan, targeting another $42 billion, split evenly between equity and debt, to continue building its Bitcoin treasury through 2027. Despite reporting a $4.2 billion net loss in Q1, largely due to unrealized losses under new accounting rules, Strategy's long-term vision remains unchanged. Analysts still view the company as a Bitcoin powerhouse. With competitors like SoftBank and Tether stepping into the space, Strategy is setting the pace, influencing not just treasury strategies, but potentially the future of corporate finance.
Now, I think that if you look at this BTC multiple, that will tend to set the floor for MNAV. It's not the ceiling. It's not necessarily the average. There are about a dozen other factors that drive a premium to BTC, and they drive the MNAV north. One of them in isolation is our equity sales or our equity financing here. And so you focus upon the 2 BTC multiple and, think that if we do a lot of capital markets activity around a 2 multiple, that will tend to drive the MNAV toward or above or keep it above 2. And the degree of impact it has, of course, is a function of how fast we raise capital and the amount of capital we raise relative to the existing Bitcoin NAV. Now, there are 3 possible objectives of our capital markets activity. The first and the principal objective is drive up the price of MSTR. Second, outperform BTC. Third, increase the MNAV. And if you think about it, you said, well, which one do you want the most? Well, you want the price of MSTR to be maximized, but the other 2 are consistent with it. And how are we going to do these things? Well, it's a function of raising capital at a high spread such that we create shareholder value at the fastest possible rate. So bear in mind, this chart's the baseline. Now let's go ahead and look at what happens. Well, the converts have 40% leverage in them. And so what you can see here is that our torque goes up to 8.9. So there's a lot more torque on this, almost $9 of value creation for every dollar of capital raised, or $9 of BTC dollar value for every dollar capital raised.
Today marks a major moment for Bitcoin policy in the United States. By the end of May 5, Treasury Secretary Scott Bessent is expected to deliver a detailed report outlining how the country will build and manage its new strategic Bitcoin reserve. This report follows President Trump's executive order from March 6, 2025, which called for the creation of a national reserve funded by Bitcoin seized through legal actions, such as criminal forfeitures. The idea is to treat these seized Bitcoin holdings as long-term reserve assets, not to be sold but held as a financial cushion for the nation. The executive order also introduced a broader digital asset stockpile, including other seized cryptocurrencies, and tasks the Treasury with developing responsible strategies for managing them. Any future acquisitions must be budget neutral and avoid placing added costs on taxpayers. Secretary Bessent's report is expected to explore both legal and investment considerations, including where these assets should be stored and what new legislation might be required to support the plan. The decisions made in this report could shape the future of digital asset policy in the U.S. and influence how other countries view cryptocurrency as part of their national financial infrastructure. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to Bitcoin Saylor for daily news all for free. That's all for today's video. Until next time.